All right, hello everyone, and welcome back to another video. It is our trades here, bringing it back with a market analysis, guys. We're going to talk about analyzing the technical action here on the micro Nasdaq, maybe a little bit of the ES, crude oil, and gold as well. Before we get into it, guys, quick disclaimer: I am not a financial advisor. This is not financial advice. You are responsible for your own decisions. I am not telling you to purchase or sell any securities or derivatives products. All right, consult a licensed financial advisor if you're looking for financial advice. Trading futures involves, or any derivatives or stock involves substantial risk of loss, including the loss of your initial capital and much more than that. Do not trade with funds you cannot afford to lose. Guys, I am an Apex Trader Funding affiliate, and I have a coupon code. If you want to support me and support this channel and give a shot at Apex Trader Funding, on your next purchase of an account or a reset, please enter coupon code RTRADES. That is RTRADES in the coupon code section where you would enter Save Now or any other affiliate coupon code. Enter RTRADES, all one word, and I will be credited with a commission towards your next purchase. So I'd appreciate that support. With that being said, guys, it was generally a green day on the futures markets today. Unfortunately, it was not a green day for me. I busted a performance account today, but now I'm trying 3 different prop firms. I've got an account with Tradeify. If I bust my Tradeify account, I'm going to be honest with you, I'm probably going to go to the advanced account, and because it's a much cheaper option. So if I go to try Tradeify again. Let's say I bust the account I have, then I will go to the advanced account 150 with a coupon code, and that'll be pretty cheap. I'm now on Top Step as well. I purchased a Top Step account at the end of the day today, and I had a small loss of $11. So I'm now on Top Step as well, 150K combine, and I have reset. I've reset my Apex, so I'm on a 300K Apex evaluation account. I was on a performance account. I busted it today like an idiot, and that is what it is. I will tell you that using prop firms is a lot cheaper than busting on a live account. So at least there's that. Okay, guys, as we get into it, let's talk here about the micro NASDAQ. Let's talk a little bit about the overnight session and then talk as we get into the live session. Okay, guys. The primary trend, let's first start with an overall analysis here on the hourly chart. The primary trend remains down, as you can see from our trend line. The overarching trend remains down as we did reach a high on Wednesday of 19,384.50. That would lean me still. I'm always trying to trade in the direction of prevailing trend. And so I would still lean towards taking shorts as, you know, whether you're succeeding, you're failing, whatever, you're always trying to take trades in the direction of prevailing trend. And so, again, I would lean on the direction of taking shorts. With that being said, we had a pretty clear trend line here that was broken today. We had a break at around the 12 o'clock or the noon hour during the regular trading hours. So, you know, you definitely could have made money trading longs today. Although I will say, again, on this hourly chart, the trend remains down on the NASDAQ. If you are looking at the chart and following along, one thing you'll notice is that there is a light blue shade behind me, and then there's a light black shade. The light blue shade, which I'm going to be marking from vertical line to vertical line, that is the overnight session, and then vertical line to vertical line here, the darker shaded color, is the regular trading hour session. All right. With the idea of wanting to trade in the direction of prevailing trend, which is taking shorts, I'm going to show you examples here on the 15-minute chart of where I think you could have gotten short. With that being said, guys, for the most part, the market was up today. It was up 1.75%, so you could have taken longs as well. All right. So the trade during the regular trading hour session, the trend was up. The first thing that I'm going to do is I'm going to show you some examples of where you could have entered in short, especially during the overnight session. Then we're going to talk about if you felt that the trend had changed, where and why you might have taken some longs. Okay, guys. So first thing I want to mention here is in the Asian session last night, we had a bit of a turtle soup that came in. This is also in a long wick inefficiency where the market had a nice clear downtrend. and it came down to about the 50% point of consequent encroachment of this wick, okay? Uh, or a rejection block. So an ICT rejection block is the closing of the candle where the market turned. In that case, that ICT rejection block would have been at 18,117 spots 75. The market came right down and touched the consequent encroachment of this wick. So again, this long wick inefficiency that we formed on 10th of April at 13:15. You can see that long wick inefficiency. ICT calls the midpoint of that the consequent encroachment of that wick. Let's talk a little bit about in the overnight session how the market went from there, describing it using ICT terms. First, we see in the overnight session what's called a breakaway gap. ICT's breakaway gap is where a fair value gap forms that the market does not come in and fill again. A breakaway gap indicates that the market is moving away from a position with some speed and some momentum. All right, so we first had a breakaway gap as we came into the late Asian session, the second half of Japan stock market. And then the market rallied. We had a bit of a retest as we came down and nearly touched this fair value gap. As we moved higher, we were targeting the liquidity that was located, this buy side liquidity that was located at 18,675. The market considered, all right, so what the market did here, if you're following ICT and you were assuming that the trend was higher, the market formed what's called an inverted fair value gap. So you can see that there's a sell side imbalance, buy side inefficiency formed at the 1900 candle, which I'm showing on the screen here. You can see that the market respected that and then moved higher and took out a few different highs that we had. So we had a high here, we had a high here, and then ultimately we had a high that was a little bit higher that the market came up and kind of kissed and rejected. But we had buy side liquidity at about 18,600, more buy side liquidity at 18,668. The market came up and then we had something of a pullback. All right. Describing the market in the overnight session, as we moved through the overnight session from London into pre-market, we had a drop of peak to trough from 0200, which is, I think that's when London opens. We had a peak to trough move of 2.5% or 478 points. So a pretty significant pullback with one pullback in between that. The market it turned around just above this order block and in some inefficient price delivery that we had earlier. So you can see that there was a long wick inefficiency here that I'm highlighting with the cursor at 18,790. The market turned around there and moved down over 2%. So a pretty healthy and decent sized overnight move. As we came into the regular trading hour session, let's now check out the regular trading hours. We can see that it was a mixed bag here on Friday. So I'm going to mark out with vertical lines Friday session, just here to here. All right, guys, during the AM session, the market mostly trended lower but did not form a new low. We then trended higher for the remainder of the day. There was no regular trading hours gap to speak of, so you can see that there was no difference really between where the market closed on Thursday and where the market opened on Friday. Let's go down to the 10-minute chart and see if we have any examples. So for the most part, the market was trending higher, or the prevailing trend was higher today during the regular trading hour session. So if you're trying to trade in the direction of prevailing trend, this is where it can get kind of tricky. The 1 hour trend or the longer trend is still obviously down, but we had a counter trend day today where the market was mostly trending higher. So if you were following the market action, you had reasons to trade on both sides, in my opinion, especially coming into the morning session. But the overall trend today was higher. So again, showing you with trend lines here that the market basically drifted higher. So if you caught on that the market was going to move higher today, where are some examples using ICT concepts that you could have seen and gotten long? First off, we have an ICT rejection block here at about 18,287.25. The market respected that. Then the market came back down and nearly touched the rejection block that formed at 10:30 in a pullback, and then it moved higher. If you were aiming for buy side liquidity, you had it at 18,648 and 18,670. One concept that ICT talks about is relative equal highs. So we can see that there was buy side liquidity or relative equal highs from the 0950 candle this morning and then from Thursday's regular trading hours. So if you were able to get in long somewhere around here or anywhere really in when the market was moving higher, you did have buy side liquidity targets. Some other things that I want to mention during the regular trading hours. All right. I want to mention a breakaway gap. So we can see that the market formed a breakaway gap between the 1120 candles and the 1140 candles. This is a 10-minute chart. That's where the market formed a buy side imbalance, sell side inefficiency, and did not refill that inefficiency. So that was an indication that we had momentum moving towards the upside. A couple other examples of where the market pulled back and you could have gotten in towards the long side. All right, we had an order block here that was formed on the 12:20 Eastern Standard Time candle. Market came back and just kissed it right there at the 13:30 candle and then moved again towards buy side liquidity. Where I busted my accounts or where I made a big mistake is I went on the full size NASDAQ. I was trying to get short for most of the day, which obviously was the wrong direction for today's trading. Again, for the most part, guys, your biggest job, ICT calls it bias. I'm calling it prevailing trend. The market has a prevailing trend. For most trading days, it's going to have a prevailing trend. And then overnight sessions, it's going to have a prevailing trend. And our 1 hour and above trend is still down, but today was a counter trend move. So I was trying to find shorts in a rising market, and that did not work for me. All right, so you needed to mostly be long today for today's intraday trading. So we had an opportunity on the consequent encroachment, the mean threshold of this order block at 18,592. That order block was formed during the early afternoon session at 12:20. The late coming into the that was the lunch hour. Coming into the afternoon session at 13:30, the market came down and tested the midway point of that order block or the mean threshold, kissed it, and then moved higher into buy side liquidity. So had you gotten that long, you had an opportunity to make 278.5 points or 1.5%. The market pretty much did nothing for the remainder of the day. So I'm going to show you a parallel channel. So you can see the market basically just flagged out and ranged for the remainder of the day as we came into the close. This is kind of where I got tripped up because I thought the market wanted to move lower. Again, guys, my number one piece of advice that I can advise to you is number one, risk management. Number two, trade in the direction of prevailing trend. If it feels like you are trading that you're trading and you're getting there about 30% of the time, 35% of the time, but it feels like, you're just not quite there trading yet. The biggest problem for me and maybe the biggest problem for you is not trusting the trend and not finding what the trend is. For the majority of US sessions, for overnight sessions, you're going to have a clear and defined trend. Sometimes the shorter term or the intermediate trend can be in conflict with the longer term trend, and that can be a difficult environment in which to trade. For example, today we have a longer term downtrend, but we had an uptrend on the intraday chart. So even though the market is still kind of in a down move overall, it was up today. Also, it's classic wisdom that Fridays tend to trend, just so you know. I don't know if that's ICT wisdom, but I can tell you that is generally market wisdom, is that Fridays tend to trend. Okay, guys, one other thing is that ICT has a model called the Thank God It's Friday model, and it's basically a 20% pullback kind of thing. So let's see if that was in effect today. So this is the ICT Thank God It's Friday model, and this is basically entering in where there's a 20% or a 30% retracement. If you were looking at the ICT Thank God It's Friday model, that didn't really get you anywhere, in my opinion. We did have something Friday overnight where if you were looking to take a short, that 20% of the overall candle did come in during the London session if you were up towards that. But that's another model that ICT talks about. So if you're trading ICT, you might want to have a look at that. Okay, guys, with that being said, let's look at some of our other markets for today. It was pretty much green across the board. The dollar was weaker today. Crude oil, guys. Crude oil was up almost 2.5% on the daily chart. You can see we formed an inside candle, an inside green candle. Looking at the 30-minute chart, we can see that we were broadly trending higher today. Okay, so if you were trading crude oil today, crude oil was generally a buy today. All right. As we came into the regular trading hour session, crude oil was actually, if you're trading, if you want a clean trend, man, I kind of wish that I looked at crude oil today. This is one reason why if you're trading your prop firm challenges, don't be afraid to trade something other than just the stock indexes. I mean, this is a beautiful trend higher where we took out buy side liquidity, buy side liquidity, buy side liquidity, and then let me see where the market peaked at 1345 right here on a sell side imbalance, buy side inefficiency that we formed on Thursday's price action. So not a ton to say about crude oil, except that if you were in on a crude oil buy, kudos to you. In terms of the ICT models, we do see that there was a sell side imbalance, buy side inefficiency that was formed, and the market came in, tested that, and then just went higher for the remainder of the day. So again, crude oil showing just a clean move higher, only one small pullback at 12:30 New York local time. Other than that, it was just straight up for crude oil. Crude oil settled into a little bit of a range as we came in. So crude oil came into a range or what's potentially a flag. So we'll see if crude oil wants to reverse and form a trading range, or if we're going to move higher and take out 62.31 and take out 63.40. So we have some highs that crude oil could come and take out in terms of the buy side liquidity, or the market might want to come back in the overnight session when we open up in 15 minutes and start trading back down. I'm sorry, not 15 minutes. When we open up on Monday. Want to give you my predictions on the micro NASDAQ on Monday, looking at the daily chart. Guys, when we come into Sunday and Monday's trading, a lot of this is going to be dependent on tariffs and economic news. Let's take a look at our economic calendar for next week. Okay. Nothing on Monday, nothing on Tuesday. We have retail sales on Wednesday, building permits on Thursday, and housing starts on Thursday. So nothing major in terms of economic releases next week. I think the whole market is going to be pretty cognizant of whatever the president is saying about tariffs. If I had to hasten a guess, guys, I think the market probably starts trading lower on Sunday and Monday, and then we move higher. I think that next week is probably going to be a green week on the NASDAQ, although I want to caution you guys that from a daily perspective, the market is definitely still moving down. All right, but as we come into next week, I think the market's going to break this downward trend line and probably move higher. So I'm expecting a move higher next week, but we will see. Okay, guys, gold. Another thing I want to talk about. Gold has been on an absolute tear. Short sellers of gold, beware. It doesn't seem like it wants to stop. Anybody that's been shorting gold futures has just been murdered. So gold on an absolute rip higher. Currently sitting at 32.54, spot 9. And no end in sight, guys. I would not short gold until you saw a clear break down. Now, we do see potentially a slowdown in momentum to the upside on gold. We can see we're starting to get some pullbacks, some red candles, but I would not at this point feel comfortable shorting gold. I just think that would, you're running a big risk. I mean, guys, gold could go up to 4,000 for all I know. So as a trend follower, I can definitively tell you that I would not want to short gold until there's some clear signs of a reversal. Okay, guys, this has been Our Trades back here with another video. I want to thank you for joining me. This has been my analysis of the micro NASDAQ, a little bit of talk of crude oil as well as gold. I hope you have a good weekend. And make sure to use that coupon affiliate code on Apex Trader Funding for your next challenge. Our Trades, all one word. Enter Our Trades or use my affiliate link, guys. That's if you want to support me and you want to support this sort of content on X and YouTube. Thank you.